Welcome everyone, welcome traders. I hope you're having a great start to your week. Now in this video we're going to be adding context to the Sunday markups that we gave on our trading view yesterday evening. So we're going to start off with euros. This is the first pair that we gave out on our trading view. What we're doing here is we're looking at the hourly time frame. Now it is very important that if you are a trader and you are looking to take trades based off of your own analysis, that you do have a general idea of what you would like to see from the markets before you come in and start trying to pick out those individual entries themselves. Now we promote this actively as it is very important to build up an overall idea of your trades, and when you start to see that, you are playing into a higher time frame bias rather than trying to trade solely on the smaller time frames. So starting off here with euro, we gave out the idea that we have three separate movements that we could see here with euro, and the idea behind this is a very simple one. Now on the higher time frame, so if we go over to the daily, you can see that we came from a bullish directional move, and you can see this with the highs and lows that are produced here, giving us a clear bullish direction. We broke down our lows, taking us from a bullish move into a now bearish move. We created a higher time frame order block here, again the smaller time frame order block that caused this shift altogether. We've come back towards these order blocks and broken down again, giving us another structural break. So this is a bearish internal structural break within our bearish range. So if we look at what price is doing here, we have exactly the same. So we have a bullish directional movement, and we have a bullish directional movement here as well. Bullish. Okay. Then we've broken down, giving us a bearish high, a bearish low, and a retracement. What did we have over here? We had a bullish movement, giving us a breakdown, giving us a bearish high, a bearish low, and a retrace movement. We have now, within this smaller time frame, if we go down to the hourly, let's clear this off. If we go down to the hourly, you can see we have exactly the same thing. So once this hourly boots up, you can see exactly what we're doing here. So remember what we showed you on the daily and the 4 hour here? We have what? We have bullish price action right here. Okay. Bullish price action. Right. Leading into what? A break of structure. Okay. Giving us bearish price action. Leading us into a higher time frame break of structure. Leading us into a bearish directional movement. So the higher time frame structure is here to here, here to here. We would now look for our new high to be formed and bearish price action to continue down, lining up with the daily and the 4 hour chart. So collectively all biases are lining up in exactly the same direction. So how does this lead us into the chart idea that we gave out? Well, the chart idea that we gave out was that we're either going to play lower within the short-term range. So the short-term range here is this high to this low, previous low that was broken, high to low, just like so. Then a previous high to low and a high, right? So we're running bearish within here. So we're either going to play bearish within the range that we were already within, which you can see is actually not the case at the moment, or we're going to push back up, confirming our new higher time frame low because we've now broken structure, pulling back into an area that we would like price to sell away from. So we have our eyes on two different points here. We didn't give an exact area that we wanted price to sell from. Now the reason for this is because we know price could come to the short-term order block that broke the structural low. Price could come all the way up into this fair value gap and sell off. Price could come to this higher time frame order block and sell off. It really is a case of where price wants to deliver to and what you see within the price action. What we don't want to do is have too much of a specific idea of what we want price to do. So we generalize the idea of selling straight off, which is now invalid. And then the other idea is that we're going to push higher within this range that we've established, because we now have a new confirmed high, new confirmed low, and a break structure, so we know that we are bearish. And we're now looking for price to interact with order blocks, fair value gaps, and again, the higher points are obviously more preferable, and we would love to see price coming above the 50% before we see that full sell-off move again. Now, we have, of course, the idea of price pushing up and then selling off. The other idea that we had on top of this was that price may come down from these areas, whether it came down from here or the upper areas, and it will hit these lower points. Now, why do we have these lower points highlighted? So let me go onto the higher time frame and you will see exactly why. Now, the reason we have these lower points highlighted is because on a higher time frame, we have had a bearish structural given to us. Bearish structural move given. Okay. We have a higher time frame high, which is here, lower time frame high, which is here. Both have been broken to the upside, giving us an area of demand in this lower point that is responsible for breaking the lower time frame. It also holds a lot of the liquidity that caused the structural break of the higher structural point. So we are looking within this lower area for a push higher. Now, what is this lower area, I hear you ask? Well, it is in fact the last down move before the upshift that occurred prior to the previous break structure. We also have liquid lows sitting within here. We have a fair value gap, and it is unmitigated. So reaching this area could provide us with a new push. Now, we're not saying that price is going to 100% go bullish from here. That's not what we're saying. What we're saying is there is potential for a pullback, a drop down, and then possibly a new pullback move to, again, possibly line up more sells for then maybe a break of structure and a change in direction, if that is what price wants to show us. Remember, we're not locking in and marrying our bias. We are simply applying ideas to what we can see within price action. And if the markets are so nice enough to deliver some of the confirmations to back up our ideas, then we can trade with probability using the ideas that we have. Remember that trading is subjective. No one is 100% correct 100% of the time. So you always have to be open to the idea that, okay, I want to see something, but price might not deliver that, or it might deliver it slightly differently than I'm expecting. So don't be too specific with your ideas. Always trade what price delivers to you on a given day or within a given time frame. And then you can be flexible and change your bias if you need to. So that was euro right there. So we're looking for price now that we've invalidated this idea to come up into this area of supply, which is responsible for breaking price down here. But ultimately, I'd love for it to get up into these higher points. There is a possibility for a short-term counter move. Again, counter moves are not that recommended if you don't understand the principles of limitations. But there is a possibility for a short-term move from the low area here into the upper area if price action delivers meeting the rule set. So ultimately, we are looking at price coming down through the lows now into this lower area of demand. But the ideal place for us to sell from is, of course, going to be above the 50 of this high, this low. And of course, if we're looking to go counter, the lower place to be buying from is between the new low and the high, which is being formed right now. So if you aren't already following me on TradingView, there's a link down below. I'd highly recommend following me, even if you just have a look and, have an idea of what we're looking at for the week. Again, I'm not trying to say by all means that every week there's going to be a correct idea given, but you will see there's a context to it that's consistent across every time frame. This is what we need. We need to build up a narrative, build up a story, and then we can trade with context rather than trading off of ideas that we would like something to happen. So let's go over to GU right here. So if you want to take a quick screenshot and take note of this, we've got our upper area, the lower point within this range, and then the area of demand at the base. Heading over to GU now. GU here. We have a similar story in terms of the context here with this trade. Now, this is a slightly different markup, but it is overall holding a relatively similar story. Now, if we come back into the higher time frames as we showed you on Euro, you'll begin to see the context playing out here. Now you can see that we have a breakdown from this major high after we take this low, meaning we're creating a higher time frame order block right here. Last up move before the downshift, just like you'd highlight the last bearish candle before a bullish shift and so on. We've come back to around the 50% of this level, which again we know just by basic understanding of ranges, we want to see price visit the 50% at least. This is the point of highest probability and the area that is most likely to hold the highest volume of orders. Within this point, we have actually come up and we have broken down structure again. So let me just get rid of this. Come back onto here. So what we're looking at here is price creating a high, creating a low, breaking structure, running down, giving us a range, which is a bearish range. We've then pushed back into this area. We've just taken out the low within here to confirm more bearish price action. So if we come down to the hourly now, you'll see the same principle at play. So you can see here on the hourly time frame, if we've just confirmed bearish price action, what is the low that we'd want to take out to confirm this price action? Well, if we highlight this, you can see the price action that was bullish right here. Okay. Then we had some bearish price action, so we of course had short-term breakdowns and highs and lows within here, but the higher time frame principle that we're looking at is this low being broken, this being our previous high, this being our new low, and selling from this point. That's where we want price to come to. That leads us back into the idea that we gave out yesterday. Now let's go and have a look at this. So first things first, you can see that we actually have a much larger area for price to come into. Now these arrows are the predictive lines that we've put in, and this is based off of the idea of roughly what we'd want to see within the market. Now if we highlight this here, you can see that the high was confirmed right here. The low has just been confirmed now by taking out this high, almost taking out this high. So we are just confirming this low right now. So we're looking for a new high to be placed within here and price action lead lower following this bearish narrative. Now we do have, keep in mind, this area that you can probably see marked up here, which is between this line, and this green area. We're going to go down and show you guys what that is. And again, it adds context to the understanding of what we have. Now, on a higher time frame basis, so if we go over here, we can see that there is very little in the way of unmitigated order blocks within here, which means we are looking at the sell side origin within here for high volumes of orders. Now remember, if you don't know about the sell side origin, go and check out the liquidity principles videos and you'll be able to learn this. But this is the area of relative high volume because this is the origin of the structural creation here. Not to forget, it is pretty much the base of the first move that created the bullish trend within here. And we also have this liquid low acting as liquidity. So highlighting this area on the hourly time frame, which I will show you, gives us a relative area of high volume. On the hourly, you can see that it's actually unmitigated, and it is the only unmitigated order block within that area. So again, even more context being applied there. The same low acting as liquidity here, and price comes down right near it, doesn't quite tap into it, but right near to it, and pushes higher. Now we're not looking for a bullish run here, we're just looking for price to have a relative pullback if we're lucky enough to get it. You can see the bearish movement happening right here, so we're looking for that bearishness to continue. Remember, a very easy way to approach the markets is if price is going bearish, expect it to continue going bearish. If price is going bullish, expect it to continue going bullish. Don't anticipate price changing direction consistently. We can only base our directional changes off of pre-established directional movements. This is why we use swing ranges to establish a bias, because we know the main bulk of the orders are already traveling in that direction. Now, you can see here that we have the area above right here that we want price to sell off from. We have this high which holds liquid, and we also have short-term areas now that have been produced that we may be able to see a counter scenario running from. Now we haven't actually confirmed the bullishness of this by breaking that high, but we are getting very close to it at the moment. So Euro is technically ahead of the curve in terms of directional bias here with GU and EU. So this is still a possibility to sell off immediately into this low. Running this low and having that retracement is still a possibility. The only time we would sort of change this would be if we get up into this upper area first, and then we'd be more inclined to just ride the sells rather than trying to eyeball the low production here. Remember, if you are in a bearish range and you have an area of demand or an area of supply, you should expect that area of demand or supply, if it is against trend, so here for example, only expect this to produce a pullback move. Don't expect it to change your directional movement. If you have a structural shift and it confirms that, then of course you can start to look for that movement. So for example, if you get down into here and you see a break structure to the upside, and then you react within here on a short term, then you can start to say, okay, actually we might be able to trade this up into here, but always expect this to run lower and continue the higher time frame trend movement down. Again, if you break this structure, changes your bias, changes the whole dynamic of what the chart is showing you. So I'll leave that on the screen for a couple of seconds so you guys can see it, and that is GU for you guys if you want to sort of whip this on your chart and follow the idea. But I am personally looking for higher prices to be able to sell this off, or a confirmation counter trend buy within the lower area of this new movement to the upside. So let's get on to our last pair for this week, and that is gold. So gold giving us a slightly different story here. Gold as a whole has changed its directional bias very little in comparison to the euro and the British pound. Now, of course, we know that gold as an asset is consistently gaining, and it always does very well in terms of gains. But we have to keep in mind the principle of where we are within this movement. Now, it is always given that you should never buy at the upper end of a trending move. You should always wait for price to come back down to a level of discount, or you should of course wait for a low to be formed, confirm a bullish movement and buy into the market. But what we don't want to do is jump straight in and expect a trend to continue. Now, again, our markup reflects this. So from this principle, we can clearly see that price is still on a higher time frame bullish narrative, putting in highs, lows, new highs, and consistently we are breaking to the upside, creating relatively strong lows, and we're looking for that low to form for a new high to go into, again, a new all-time high. Now, based off of the same principle, if we've seen an all-time high, we know that price generally will seek much better prices before delivering a new all-time high. Now, this does not mean that we are going to pull back into extremely low prices. It's not what this means. But it does mean if there is areas of liquidity that are easily accessible, for example, we should look for price possibly delivering to that point. Now, the main element I want you guys to look at is we have this high, we have this low, we have this high. So it's very clear that we are bullish in our direction. That is the current directional movement. If we look between this high and this low, what have we seen within here? So we can see within this that we have a clear bearish movement, okay? Internal, but still bearish. So internally bearish movement. Okay? And until we take this high out and close above it, we still have potential for sell-offs within this internal movement here. Now, of course, you can see the momentum has, of course, dropped off, and we're not creating heavy new lows like we were. But until we actually break this, we should always keep in mind lower prices is what we are looking for currently on gold. Ultimately leading us back into the idea of a bullish continuation. Now, the 2 points that I'm looking at here for the retracement. Again, we gave this out on Sunday. If you're not following me, you should check the link out down below and drop us a follow. Every Sunday we drop our main pairs, and you can take a look at that and learn a few things and improve yourself. Now, the main principle here is that we want to see price retrace within here. Again, we don't want to see extreme highs to be able to sell off. We know that we're bullish. I ultimately have preferred, again, across every single one of the markups so far, the initial push down to continue that bearish price action, leading us into the swing low, the liquid low, and this liquid that sits just underneath all of our structures, to then give us a break of structure and push us back into that bullish directional movement. On the other hand, we are going to keep in mind the same principle that we have across the board here, which is that price may break this high and it may seek better prices for a sell-off, reaching back down into our higher time frame range, which is actually sitting way down here. Now, we will show you that quickly while we're talking about that, and it is found on the daily time frame. You can see the same principle applied. We had a huge spike to the upside taken out. So you can see that we are right in the upper area here of the bullish trending move, giving us a little something like this. We're sitting right in the upper area here, so it is very high within the bullish range, but this is on a daily time frame. So we have to keep in mind, on a daily overall view, we are sitting in the upper end. So a sell-off lower into here would be ideal, again, for higher prices. But until we have a confirmation of price selling off on a daily time frame, we will only expect it to do what? Continue to buy. This is what I was saying earlier. If price is doing something, expect it to continue doing that. Unless it's a short-term move, then of course don't expect a short-term move to last forever. So once this chart decides to load back up here, we can go back over to here and you can see the principle now. So I would love to see price sell off from here and give us a short-term entry down into the lows. If we do not react here and go bullish, this is not an area that we will be looking for higher prices from. Now, why is this? Well, there's a couple of factors here. Now, the factors of that overall are the following. We'll be breaking a swing structure to the downside, which is going to change our internal short-term bias. It's also going to deliver a new low in a newly established bearish movement. So the upwards move we have marked here will only be a pullback for lower prices. Now, of course, this is just what we want to see, and what we actually get is going to be determined by the next few sessions of price action. So we always keep in mind that we will like to see something, but whether we actually get that or not is a different story. So remember, always trade what you see and not what you want to see or what you think is going to happen. Always keep your bias in mind, but remember, you have to be open-minded. You can't marry your bias and say, I'm just going to buy even if it looks like it's selling. If price looks like it's doing what it's doing here and it's clearly selling, unless you see a clear break of structure, expect to sell again. So guys, I hope you've enjoyed that context session there for our Sunday markups. As I stated earlier, if you haven't already dropped me a follow on TradingView, I highly recommend it. If you want to join the Discord community and join 2,000 plus members, then make sure you hit that link down below. Of course, if you enjoyed this, hit the like button and hit the comment button, and I'll catch you all in next week's session. Peace out, guys.